Hey guys, how's it going? It's the Crypto Analyst here, and a lot of people have been talking about the crypto market cap as of lately. People have been debating whether we're going to go back down below a $100 billion market cap or whether we're going to raise above a $500 billion or even a $1 trillion market cap for cryptocurrency. So this raises the question, what is better, a smaller market cap or a larger market cap? In this video, we're going to go through and explain the pros and the cons of both a small and a large market cap, as well as show the differentiations between the stock market and the cryptocurrency market. So if you guys are interested, go ahead and stick around for the entire video, as there will be important information discussed the entire way through, as well as hitting the like and subscribe button, as it does help out the channel a lot. So without further ado, let's go ahead and jump into this. Now, the cryptocurrency market is substantially smaller than the New York Stock Exchange. The New York Stock Exchange has a rough estimate of around $15 trillion in total worth and total market cap, while the cryptocurrency market right now has an estimated $400 billion in their total market cap. Now, Bitcoin and cryptocurrencies are substantially more volatile than most stocks are, and this is because they have a smaller market cap. Now, this is both a good and a bad thing. It is good because you can essentially gain more money faster, which makes it so volatile, which is what a lot of people really enjoy about cryptocurrency. So since it has a smaller market cap, it is more susceptible, to getting manipulated. As a result of this, let's go ahead and give an example. So let's just say that there was a business that was worth $1,000. In this business, someone owned $100 worth of the business, which is roughly 10%. And so he decides one day that he wants to go ahead and sell his $100 because he wants to go take his wife out on a nice dinner, right? So what he does is he sells $100, which is 10% of the company. Now, $100 is not a lot of money, right? So it's very easy to manipulate the entire company by taking out that $100, which is 10% of the entire company's trading. In the same way, cryptocurrency is a lot like this. It is 30 times smaller than the New York Stock Exchange, which makes it substantially easier to manipulate than stocks. With cryptocurrency having a $400 billion market cap, it is much more easy to manipulate with smaller amounts of money. People can come in, and we call them whales because they are giant investors. They can come in and dump a bunch of money in groups and manipulate the cryptocurrency market in its entirety. Well, they cannot do the same thing, at least not as substantially in stocks. So let's go ahead and give the example of, say, the Mt. Gox, right? They come out and they sell over $1 billion in cryptocurrency, and the whole market crashes. Now, this is at a time where our market cap was below $1 trillion. Now, can you imagine if they tried to do this where they only sold $1 billion in stocks in the New York Stock Exchange, something where it's 30 times bigger? It would have a significantly less impact. So this is why when we go over and we see things like Apple, it is substantially more volatile, and you see it moving a matter of like a couple dollars in an entire month when you go over to a Bitcoin. And I know a Bitcoin is not necessarily the greatest example, but you have it moving thousands of dollars in a single month. And I know that the price isn't comparable, and maybe something like Litecoin would be a better example because of market cap and total circulating supply, and I understand that. But you can see that it is a substantially more volatile chart, even if we're not looking at US dollar evaluation. Now I'm going to go ahead and zoom this out so you guys can see both of these. Substantially more volatile. So that is the difference between both of these. Now, a high market cap is not necessarily a bad thing. While a smaller market cap does present the opportunity for you to get more money faster. So let's put this at an example. So I have TRX pulled up right here, right? So Tron, not too long ago, was worth around 2 cents, sitting just over 300 Satoshis. What this means is that with a substantially lower amount of money, you could double Tron to 4 cents and double your entire money and double your entire portfolio that was held within Tron. Now, this would take a substantially less amount of money, and it would cost you, billions and billions of dollars to be able to triple and manipulate the market to triple your money in Apple than it would in something like Tron. So because Tron's market cap was so low right here, sitting at, at the time it was, I believe, $3 billion, now sitting at $5 billion, it is substantially smaller and thus easier to manipulate. So that is the reason why people like cryptocurrency so much, is because they can simply double, triple, quadruple their money. They can even 10x it substantially easier than they could in the stock market. Now, there are pros and cons to this. The cons are, since it can be manipulated, it can be manipulated downwards just as easily as it can upwards. People like the stock market because it is less easy to manipulate and thus more reliable and respects the TA more often than cryptocurrency can because it is subject to less manipulation. So people like having reliability over volatility, and this really where it comes down to you as the person and the individual to decide what you want more. Do you want more reliability or do you want more volatility? So since the market cap of crypto is so small, there's a lot more room for it to grow, and there's a lot more room for you to know 2, 3, 4, 5x your money in a faster period of time. However, that does not come without risk. So that is the difference, guys, between a low and a high market cap, the differences between the stock market and the crypto market. I hope I did a good job at explaining this. You know, this isn't necessarily the easiest video to make, but I hope this was made in a video or in a way that you guys can all understand, and I put this simple enough so that everyone, even if you don't have a great understanding of TA or markets or anything like that, that you were able to understand this and learn from this. If you guys did, go ahead and like and subscribe, as it does help out the channel so much, and it means a lot and helps me create more videos. But until then, guys, I hope you guys did enjoy this video, and I will see you guys in the next one.